Hey everybody, I'm Christopher Green. You're tuning into AMTV, Alternative Media Television. Please click the link below to support our sponsor, Powerful Products. That's powerfulproducts.com. Click that link. Check out the Goal Zero Yeti series, your ultimate power backup workstation. Support them, support AMTV. So I think as we approach the second half of 2014, we will officially enter the mother of all depressions here in the United States. And let me preface by saying I believe we're already in a depression. I think it started in 2008. And again, I'm not just some bystander that has his opinions. I was actually a guy who worked for a Wall Street firm, who was in finance for over 10 years, who studied this on a regular basis, who actually managed people's investments. And this is what I saw in 2008. In fact, people thought I was nuts when I told them to get out of the capital markets, to get out of stocks, and to really shore up their ship prior to the crash that ensued in 2008 and 2009. Now, of course, since that time, there's been trillions of dollars worth of bailouts. Interest rates have been taken down to zero, and of course, they're still at zero. Notice how Ben Bernanke still hasn't raised the federal funds rate. He's kept it at 0%. If the Federal Reserve really felt and thought things were doing better, if they were really encouraged by above average GDP growth, which we're not getting, it's totally artificial, I don't care how or what they're reporting, they'd be raising rates. But they're not doing that because they can. If rates rise, the wheels fall off. So how do we get to the mother of all Great Depressions in the second half of 2014? How do we finally pay the piper here in America? Well, I think it all revolves around the debt. I think it all revolves around the fact that, again, the federal government only bought a few more months, having suspended the raising of the debt ceiling from $16 trillion plus to infinity by just a few months. In February, Republicans and Democrats in Washington, D.C. will be warring over the same problems and over the same program that we just experienced a few weeks ago. I don't know necessarily if the catalyst will be internal conflict in Washington, D.C. that sets the wheels in motion for the mother of all collapses, or the more likely scenario probably being an external force. Could just be global investors cashing out of U.S. treasuries and the U.S. bond market and forcing interest rates higher. And we all know what happens when that happens. It won't be a pretty picture. And so in the meantime, you know, what we're seeing is a total artificial propping up of the financial system itself. And I think that the stock market could realistically go a lot higher, even from where it is today. I think that we could see the Dow at 18,000 before the mother of all collapses. Because what's happening here, Ben Bernanke, very similar. He's repeating what Alan Greenspan did during the Clinton era. He creates a bubble, and then he exits, writes books, tries to, protect his legacy, while the next guy inherits the mother of all Great Depressions. We also have the external factors and forces of war, not to mention the structural problems that we have economically and financially here in the United States today. This is very scary, and for a lot of people that don't pay attention to what's happening with the financial system and aren't as educated, might say, God, well, things seem like they're doing rather well. I mean, we just reported above average GDP according to CNBC, and the stock market's at 16,000, an all-time high. So isn't that great? Well, if it's so great, ask yourself this question: why won't the Federal Reserve raise interest rates? And why are they still buying $75 billion a month in asset-backed securities? Again, this is just a fake out. This is just a sell job. It's a con job. It's smoke and mirrors by a snake oil salesman, basically selling you on the idea that things are better when they're not. And they're not going to get better. The bubble's getting bigger, bolder, badder than anything we've ever seen before. And as a consequence of that, we will have, in my opinion, the mother of all Great Depressions here in the United States, which we are already living through. I think that the stock market, once it hits its new peak of 18,000 and head fakes the masses, could collapse anywhere from 50 to 80% of its original value. I think that barring artificial stimulus, barring 0% interest rates, and the trillions that has been spent already, I think the Dow realistically would be trading between 6,000 to 8,000 today. I think that'd be a realistic number, considering we're in a depression. Considering considering it took over a decade for the United States to push itself out of, or dig itself out of the ditch that was the 1930s Great Depression, post the 1929 stock market crash, which was a systemic event and a systemic shock caused by too much credit. Too much easy money. It was really essentially a margin call on the American people. And we're going to get that margin call again. It didn't happen in 2013. I think it's highly likely in 2014. It means you and your family do need to be prepared for what's coming. And, you know, don't get caught up in the hysteria here. Wait for it to get a little bit. It's going to get even more crazy. It's going to get even more insane. We're going to see even more euphoria on Wall Street, I think. I think that the tech sector is going to go higher. I think the Dow, it'll hit 18,000. It's going to be unbelievable again. We're already seeing the stories in the news right now on CNBC. We saw the same thing in 2007, prior to the collapse in real estate, prior to the collapse in stocks, when everybody, including their brother and their closest friend, was, you know, buying and flipping 10, 12 homes and becoming easy paper millionaires. None of this is going to last. And over the long haul, we will revert back to the mean. And the mean is a depression. And it'll be much worse, unfortunately, than what we would have had because of the fact the Fed has spent so much money and so much stimulus and has had interest rates lubing the system at 0% for so long that I'm afraid we will not recover from the next event. We will not recover from the next shock. Again, I really think that the second half of 2014 will pan out to be the greatest of Great Depressions, when the masses finally wake up to the fact that we really are in trouble. I'm Christopher Green, hard-hitting in your face. Please click that link below to support our sponsor, Powerful Products. Make this video viral, and thank you for your support.